I wanted to talk about something real quick. A lot of people think you need a whole lot of money to start investing, and that just ain't so. Many people think you need $1,000, $10,000, $100,000 to get going. A lot of people think you got to be some white guy with gray hair and a gray suit and a white shirt, white crispy shirt and a black tie. That just ain't so. You can be a bald head black guy just like me. By the way, I wasn't always bald. Always been black, wasn't always bald though. So, I still run into that, even though I talk about this all the time. I talk about this all the time, how you don't, again, need a whole lot of money. You need $1, one whole dollar, and you can start your investment journey. Again, you don't need a whole lot of money. Now, when I say you need $1, that doesn't mean you put $1 in and then tomorrow you wind up rich. You snap your fingers and you poof, you're a billionaire. You're like Jeff Bezos or Elon Musk or Bill Gates. No, that just ain't so. That's not the lick, y'all. You put $1 in and then you keep going and you learn more and more and more until you get comfortable, right? It's just like driving a car. You start slow, start off in a parking lot somewhere, learn how to turn, learn how to park, learn how to go in reverse, master the basics, and then you can step your toe in and get even more. Then maybe you go out to a street, a non-busy street. And I'm bringing all this up because I've been teaching my daughter how to drive. And so it's just fresh in my mind. But the analogy from investing to driving or beginning of driving is very, very clear to me. There's definitely a connection here. So I would say make sure you start slow. Start with $1. Don't got to do nothing whole fancy. Don't got to try to stun on nobody. Don't got to try to show off and say, hey, I got plenty of dollars. None of that's necessary. None of it's necessary. Again, start with $1. So I started with $50. Well, let me backtrack. I invested $50, right, into oil. Now, I want to show y'all something because this happened last year. Now, I've been on TV, on the news, talking about investing.
This outbreak is also causing stocks to take a nosedive. The Dow just suffered its worst single-day drop in history.
And we're joined now by financial strategist and the founder of Philly Tax Team, Kamari Ellis. Kamari, thank you so much for being here with us. I mean, that's kind of the fear now. I mean, you have the health concern, you have the financial concern with stocks plummeting. The three main indexes are on track for the worst week since, 2008 and the financial crisis there. So should we be, concerned here? What's happening here?
Well, anytime you're talking about your money, you should be concerned. But I don't think it's a reason to panic. There's a saying that goes, you combat panic by having data, right? So the more data you have, the better you're able to make sense of this. This is a rare occasion. This doesn't happen too often, but usually when we see these sharp declines, the market tends to bounce back over a 6 to 8 month period.
Right. So is there any need for people to look into the investments they currently have or move anything around?
I think for folks who are approaching retirement or in retirement, they should be double checking their accounts right now. They should be making sure that they don't have extra exposure to the stock market. For those who are younger, our millennials, our 20s, 30s folks, they don't need to worry. Keep investing, stay the course. When the market crashed last year in February and March, what did I tell people? Keep investing, don't stop. And as you all have seen, that the market has just been running. And again, a lot of people won't get in because they feel like they don't have enough or they feel like they don't know enough. And all you got to do is start with something simple.